Get a check on this Monday morning on gold and energy prices. Joining us now to talk gold, Peter Schiff, CEO of Euro Pacific Capital, and on oil and gas, we've got Matt Smith from Schneider Electric. Peter, first to you, because you and I have spoken many times in the past. Thanks for getting up early for us. You think there's a long-term erroneous view for gold because you believe that people have gotten in for the wrong reasons short-term. Give us your long-term take and tell us what you think has happened in the gold market in the last year or so.
Sure. Well, I think recently a lot of shorts have come into the market. A lot of speculative longs have exited based on three false narratives. One is that the U.S. economic recovery is gathering momentum. I think the reverse is true. I think we're relapsing back into recession. In fact, I think a more honest read of the GDP or reporting by the government would reveal that the Great Recession never ended. Number two, a lot of people believe the Fed is getting ready to taper off on its quantitative easing. I think it's the opposite. I think the Fed is really preparing to increase the monthly size of QE. And then three, people say that inflation is not a concern. In fact, I think it's a big problem, and I think it's going to get a lot worse. And I think when the speculators realize how wrong they have it, and when they try to reverse those positions, I think a lot of the gold that they sold on the way down is not going to be available for sale on the way up, and I think you're going to get a huge spike in prices.
There's been a huge call for inflation the last few years that really hasn't materialized, of course, unless you're talking about things like health care and college educations. Everybody knows inflation exists there. But if we actually get, let's say, as the government measures it, and I kind of agreed on this point, Peter, real inflation, 3.5%, 4%, what is that going to mean for the price of gold?
Well, I think it's going to go a lot higher. But, you look at the GDP numbers that they just reported last week for the second quarter. The only way they got 1.7% growth, which, by the way, by the time they revise it down, it'll probably be closer to zero. But they assumed that annualized inflation was running at just 0.7%. Now, I don't know how anybody can come on this network and believe that that number is any way credible. There is no way inflation is that low. So there's no way growth is as high as 1.7.
All right. Look, Matt, I want to bring you in this conversation as well, because a big part of the inflationary story, of course, is oil. I mean, oil is not just what we put in our car. It's used in so many different products. I kind of agree with Peter's point about inflation, but give us a check on the oil markets. Tell us where you see oil going, higher or lower in the next month or so.
In the next month or so, I expect we'll probably go up and test $110. That was the high of last year. That said, with all the geopolitical tension that we're seeing just in the last day or so, all bets could be off if we do see some sort of coordinated attack on that front.
Yeah, Andrew, Becky, and I, we've all been talking about these terror threats and why the stock market maybe isn't reacting more this morning. We're also not seeing that in the oil market. How come?
Well, that's right. Well, it is just murmurs and rumors at the moment. However, we are seeing unrest in Bahrain, in Yemen, and if we do see any sort of increase in violence on those fronts, their proximity to Saudi Arabia could really just spike prices higher. That said, I don't want to be sort of scaremongering or anything, because all the while, when nothing's really happening, there's no real concern immediately.
Well, I don't think you're scaremongering, Matt. I mean, what did the government say? It's the highest level of, quote, chatter among some of these terror channels that they've seen since 9/11. So, Peter, just the last question to you. How much do you think about things like this? I mean, you read the stories, obviously, the last few days. You wake up on a Monday morning. Does it change the way you invest?
No, I'm looking at the big picture. You guys were talking just before I came on about, who's going to replace Ben Bernanke. Is it going to be Yellen? Is it going to be Summers? I mean, to me, it's like asking people, how they prefer to be executed, by the guillotine or by the firing squad. We might as well make A-Rod the new Fed chairman, because he's got a lot of experience with artificial stimulants. So I'm focusing on that. And if you look at the big picture, oil prices, gold prices are going a lot higher because we're going to print a lot more money. Money's going to lose value. The price of everything is going to go up.
So would you suspend Bernanke or give him a lifetime ban, Peter?
Well, I think that Ben Bernanke is, let Alan Greenspan off the hook. Because I used to think he was the worst Fed chairman ever until Bernanke came and outdid him. Maybe he's looking for his successor to return the favor. I don't know. But, I mean, if you're a gold bull, and I guess he's done you a good favor, but if you care about the country, which I also do, I think he's done an incredible disservice to the nation. I think what he should have done is applied the discipline. He should have never done the quantitative easing. He should have raised interest rates. He should have refused to subsidize all this government spending. And he should have forced the free market restructuring that this economy badly needs. Instead,
Peter,
all we did is postpone the pain.